Hello everyone, this is Riya Singh, the Senior Currency Research Analyst for Nirmal Bank. So let's look at what we are expecting from the currency market and also from the RBI meeting that is scheduled for August 5th. Now if you look at the Indian rupee, it has already appreciated below it surpassed the levels of 78.50 in today's sessions. So this has happened more because of the contributing factors such as the inflation, which has cooled off from the highs, and it is expected to come at around 6.8% for the month of July. Secondly, the FII inflows have improved. They have been a net buyer for the month of July, so that is one of the inflows that is aiding the Indian rupee towards the appreciative side. Thirdly, the collective work that the government has done towards getting the inflation under control, with getting the excise duty cut, giving some relaxations on the import duty. So all these factors have helped the Indian rupee. Now if you look at the Forex reserves, it has fallen from the highs. If you look at the weekly data, there is again a 5.5 million that have been sold off, and I think a chunk of it has gone towards getting the rupee appreciated from the highs that it had seen 80 and 80 beyond. So the collective work that the RBI and government has done has aided the appreciation of the Indian rupee. The cool off in the commodity prices is again something which was a major concern, has cooled off from the highs, because if you look at the data that is coming from China and Japan, the PMI numbers, they have seen a slippage, which is translating into a dent into the oil demand, and thus more bearish lookout for the oil going forward. So I think if you look at the RBI, which is scheduled for its MPC meet on August 5, you can expect that a moderate stand could be taken on it rather than the aggressive one, and they had done back-to-back aggressive rate hikes. So for this MPC meet, we are expecting a rate hike of around 25 bips, not more than that. The reason being the inflation will continue to decline because the oil, like I said, commodity prices have cooled off. Now the edible oil was also one of the major concern because the Ukraine, which was supporting, which was exporting these oil, the edible oil, the sunflower oil, it got halted because of the Russia-Ukraine war. Now they are in talks, and we could again get our first shipment of sunflower edible oil after 5 months, which will be around 60,000, and this will get the price down. The government has also taken step to do a excise duty waiver up to 2 million ton. So all in all, you can see a decrease into the edible oil. They have also increased palm oil imports, taking into consideration the festive season that will be starting off. So food inflation would also come down. As I said, the edible oils will come down. The season, we are receiving a good monsoon also, which was a major concern when we witnessed the late monsoon. But right now it is on the path of recovery, and taking into consideration the monsoon scenario, the edible oil cooling off from the highs, I think food inflation will be also under control. So inflation was a major part for the RBI towards getting the aggressive rate hikes, towards doing the aggressive rate hikes into the economy. So I think overall it could cool off. 25 bips is something we are expecting. Now what are the risk to this situation or to this outlook is that recently there is US-China tension that could arise from the visit of the US Speaker Nancy Pelosi. So I think if that happens, these statements have already started coming in from the China. They have scheduled an emergency meet, and they have been giving out aggressive statements. So if US-China tensions escalates, that will be another geopolitical tension that will be added to the ongoing scenarios and the ongoing uncertainties. So this is one of the major concerns. Secondly, if you look at the Japanese yen, we are seeing quite a sell-off into the Japanese yen USD JPY pair. So Japanese yen has been getting stronger and stronger. It has fallen from 140 to 130 in levels. So if there is another major breakdown, or if the Japanese yen again goes for a very aggressive appreciation, there could be a liquidity crunch and the safe haven status could come back, and we could see sell off again happening into the domestic market. So this is one of the risks that we are seeing. I think overall what scenario we could look at for the USD INR levels will be, it could correct towards 78.25 to 77.80. So it should bottom out around those levels before pivoting again towards the 79.25 levels. Also, if a reversal happens, 79, 78, 75, 78, 88 could be a major resistance that you could look out for going long into the USD INR. But I think it should bottom out at around 78, 77, 88 levels. That should be the bottom line for the USD INR. Take into consideration that there are still uncertainties that is going into the global on the global level. So that's what the view from the Nirmal Bang is coming in. Thank you for watching.